Hello and welcome to My Finance Teacher on YouTube. Today is 3rd of June 2017 and gold has pushed up over the last few weeks and even yesterday on Friday. However, I still don't think it's time to buy gold yet. Let's talk about the details. Now in front of you is a weekly chart of gold price. And last week I did expect gold to start moving down. You can see that discussion of that expectation in my previous video. I have to admit that I did not expect gold to push further for another $20 up or so. However, the general expectation, the longer term expectation of this consolidation for gold over the next several weeks has still not been broken. We have this triangle consolidation, and although the last week's rally has peaked slightly above this upper level of the triangle, the general idea has still not been broken. And there are a few reasons for that. Let's talk about those. Here's the daily chart of gold price. And this recent pop-up on Friday, yesterday, was mainly due to the weak jobs report that came out in US on Friday. However, I don't think there is much potential for gold to continue moving up, since the RSI, in this case this is a 10-day RSI, has already reached very close to overbought levels. Additionally, let's have a look at what has been happening with dollar. This recent push of gold price up over the last several weeks has been helped by this decrease in the dollar value. And again here, we don't expect this decrease in the dollar value to continue, because the RSI level here is already close to oversold, which points to a potential for dollar to rally over the next several weeks. Additionally, as I discussed in my previous video, you can see a link at the top of your screen, we are in the time band for dollar to start its rally over the shorter term cycle. So as I mentioned, we're back to the weekly chart of gold price. This idea of a consolidation over gold price before a shoot up is still in play. Another factor that supports the expectation that gold price will move down over the next several weeks is that in the middle of June we will have an FOMC meeting, and it's quite likely that as a result of that meeting interest rates will be increased, although slightly, but nevertheless interest rate, the Fed rate, will be increased, and gold doesn't do well with higher interest rates, since gold itself is not an interest bearing asset. So one would expect gold to go down after a hike in rates. However, of course, markets don't work in that way. Markets have their expectations, and in the expectation of higher rates, gold price is going to move down. That is similar to sell the rumor, buy the fact effect. By the time the interest rate hike happens, and of course that is uncertain, however there is a greater than 90% chance at the moment, according to some analysts, of an interest rate hike. By the time the interest rate hike happens, gold price would have already accounted for that hike, and it would be ready for the breakout of this triangle consolidation zone to levels higher than the previous peak, which is around 1305 or something like that. So that is the expectation over the next several weeks. Remember, this is not investment advice. However, I do wish you luck. Thank you for your attention, and I do appreciate your subscribing to the channel, commenting, and liking the video.